Hello everyone, welcome back to our channel. Today we are diving into the world of investing and talking about a fantastic option for those interested in gold, sovereign gold bonds or SGBs. Let's break it down in simple terms. So what exactly are sovereign gold bonds? These are government securities, but instead of being tied to regular currency, they are denominated in grams of gold. In simple terms, it's a way to invest in gold without actually having physical gold. The Reserve Bank issues these bonds on behalf of the Government of India. Investing in gold is like planting a seed of wealth that grows with time. Now, why should you consider SGBs over buying physical gold? The cool thing is that the quantity of gold you pay for is protected, and when it's time to redeem the bonds, you get the ongoing market price in cash. No worries about storing gold. And you also get a 2.5% interest per year on your initial investment. Plus, no making charges or purity concerns like with gold jewelry. Gold is not just a precious metal, it's a timeless investment that shines through market uncertainties. Of course, with any investment there are risks. If the market price of gold drops, there could be a capital loss. But here's the catch. You won't lose in terms of the units of gold you paid for. So, it's a bit of a safety net. Here in this table you can compare SGB versus physical gold. The storage of SGB has no risk and physical gold comes with significant risk. The regulator of SGB is Government of India, whereas physical gold has no authority. In SGB, no making charges, no GST, no expense ratio. In physical gold, making charges vary from 8% to 35% of gold rate and GST applicable. SGB gets 2.5% interest and physical gold gives no interest. When we compare SGB with gold ETFs or mutual funds, both have no risk. The regulator for SGB is the Government of India and the regulator for gold ETF or mutual fund is SEBI. No expense ratio for SGB and ETFs or mutual funds. The expense ratio will be charged by the asset management companies for managing the fund, and there would be no interest paid by ETFs or mutual funds. Buying digital gold is unregulated and risky as no authority. GST applicables, no interest. My friends often ask, shall I buy digital gold through some payment apps as they are providing offers, etc. I tell them, if we already have the safe and best option provided by our government, why to take unnecessary risk? This makes SGB attractive as it's offered by Government of India with no risk, no making charges, no GST, no expense ratio, and comes with fixed 2.5% interest. So what is the eligibility? Who can invest in SGBs? If you are a resident in India, you are eligible. This includes individuals, HUFs, trusts, universities and charitable institutions. Even minors can invest in with their guardian's help. You can get the application form from designated places like banks or even download it from the RBI's website, and also joint holdings are allowed. Investment limits. Now let's talk about how much you can invest. The bonds are issued in denomination of 1 gram of gold and the minimum investment is 1 gram. Individuals have a maximum limit of 4 kg per fiscal year, while trust can go up to 20 kg. And yes, each family member can buy up to 4 kg individually. Interest and redemption. What about the interest? The bonds carry a fixed interest rate of 2.5% per annum, and this interest is credited semi-annually to your bank account. When the bond matures, you get back the principal along with the last interest payment. How to buy and sell? Alright, let's talk about the nitty-gritty of buying and selling. You can get the bonds from various places like nationalized banks, private banks, designated post offices, and even stock exchanges. If you apply and meet the criteria, you will get an allotment. And yes, you can sell them on the stock exchanges if you want to exit before maturity. Tax implications. Now the boring but necessary part, taxes. The interest on these bonds is taxable, but here's the good news. The capital gains tax on redemption is exempted. So, if you hold them till maturity, you are in the clear. No TDS, but you are responsible for complying with tax laws. The best way to buy or sell the SGBs at any time is through our stockbrokers, as the SGBs are stored in demat form. All the SGBs are listed and trading in the secondary market. There are two challenges here. One is liquidity issue, as we can't find buyers and sellers immediately. And the another one is there are 130 plus SGBs listed and available in each exchange, NSE and BSE. Which one to choose out of 260 plus SGBs is the biggest decision. Of course, there won't be much price difference between the SGBs, as all of them follow IBJ rates, which is Indian Bullion and Jewellery Association. The price difference would be even rupees 500 or 800. Yourself can notice the price difference across the SGBs, as this is because of different issue dates, face values, dividend dates, time of maturity of the bond, etc. Various other factors. We have come up with the solution and have been using this for more than a year now. It will resolve the liquidity issue and also gives you the best sorted list of SGBs, which are offered at a great discount in the current live market. Here I am not providing any kind of advisory to buy gold or any recommendations. Gold is the best commodity to diversify your portfolio. Gold is the God's own wealth. If someone even says to buy gold is not at all a risky advisory, as buying equity stocks. The SGB gold is a kind of calculator tool which will calculate considering live prices of SGBs with 24 karat gold price and other factors like maturity date, dividend date, face value, etc. of the SGB, and gives you the sorted list of best available SGBs of highest discount with offer price and offer quantity with last traded price. It also gives you the theoretical price of a SGB based upon calculator. Though the calculation is very simple, one can do it by themselves by doing some research, by investing their time, cost and energy in Excel, etc. etc. Sorting with live market and building the stable system is not easy for everyone, I believe, as practically we can't watch or look into the 260 plus SGBs at any point of time to see which one is available at a discount rate. You can see the difference and instant benefit by using this app, as it will give you the best SGB at very discounted price. Even if you buy one quantity which is minimum, you may see the difference of rupees 150 to 200 plus from this app. You can get more advantage with more quantity orders as the discount multiplies. We have also integrated with the stockbrokers based upon customer demand, which helps them to place order manually and saves the time. All the compliances are taken care of and we follow SEBI and exchange guidelines.